the closing entries, how it works. So closing down of revenue, expense, and dividend, how it affects the retained earning account. So retained earning is credited by 7,500, see here, and then expenses, all 40, this all belongs to 4,600. And then the dividend is, wait. So that balance is the balance that should be carried forward to balance sheet. It means we close down every income statement item so that only balance sheet accounts, they move on, which shows the worth of the business. Because sales are performance measures, expenses are performance measures for the current year, what we have done during this year, right? And we close down, okay, we did this much sales and we received this profit, that's it. So what should be our next year target or next year performance? Then we open up the revenue account again, the expense account again, the dividend account again, and then we close down these accounts. So in this case, the income statement item must be closed, and the balance sheet items, their balance should be carry forward or move on. So this is closing means, right? Rent, expense, all the entries are closed. So closing entries, all this 4,600 came from this balance. You add it down. This is for dividend, right? You close down this account permanently, right? There is no balance here. Similarly with the sales, you close down this balance. So sale account is closed, and expense account are all closed. And all the effect go to the retained earning, and this account will go to balance sheet. So the normal account for retained earning is credit, and we know that this is increase. It means this will go to owner's equity as a plus 18,500. Okay, now we have illustration so that it will further strengthen your concept. So let's talk about this. So again, I'm going to ask, are you with me?
Yeah.
Yes, sir. Yes.
If you still have any ambiguity, so let's clarify this through some kind of questions so that we understand what we did in our previous slides. Okay, let me read the question. So prepare closing entries. Whenever there is a closing entry, remember these three words: revenue, expenses, revenue or sales, one of the same things, and then dividend. We need to close these entries. And what we remember, So what we remember from these three belongs to retained earnings. So let's talk about this. So preparing the closing entries from the following selected accounts from the records of Westmont Service Corporation at December 31st, 2014. So we have given cost of goods sold. Cost of goods sold belong to expense or assets? Expense. Accumulated depreciation belongs to, this is a contra account for asset. This is our balance sheet item. Selling, general and administrative expense will go to income statement. Cost of goods sold also go to income statement. Retained earnings balance 31st 2013. We are making 2014, so it means that is the beginning balance, and we don't care about that. That will go to balance sheet. This is the balance sheet item. Revenue, income statement item. Depreciation expense, income statement item. Interest revenue, income statement item. Dividend, income statement item. Income taxes, income statement item. Accounts payable, balance sheet item. right? So now we segregated all these accounts, and now let's see here. So first of all, close the revenue account. So we have two revenues here, service revenue and interest revenue. So when revenue occurred, right? For example, we sold and we received interest revenue. What was the entry we made when these occurred? We made, for example, cash, which is 64600 to service revenue and interest revenue, which is 63800 and then 800, right? So this cash is basically balance sheet item, so we are not disturbing that one. All we have to do when we entered, for example, when we entered these entries, we make the revenue account credit, and when you close it down, you make a reverse entry. You have to make him debit. So what would be the entry then? And we know that revenue account belongs to retained earnings. So can we make the entry? Yes. We make a reverse entry. Previously, we make this revenue and interest revenue as credited, but now we are making this reverse entry to debit. And the logic behind that, because we already created this one, if this is revenue account and 800 here, so we have to make exact same amount of debit side, right? So we may have to make the entry. So let me just clear this off. Entry would be
service revenue to retain earnings,
interest revenue to
retain earnings.
Understand? This is me closing down the books of accounts or closing the accounts or closing entries. Understand? So which books we close down and which books we do not close? Only those books of accounts we close that belongs to income statement. Understand? And now closing of the expenses. So we know that which kind of expenses we're talking about. This expense, not this expense, because this belongs to balance sheet. This expense, this is the balance sheet item. We already accumulated for this one. Already accumulated for this one. Depreciation expense, yes. Dividend, yes, yes. And account payable, no. Entry would be, so when we recorded this entry starts from expense to cash, right? And now we have to close down these expenses. It means expenses would be credited. So entry would be retained earning to
Expenses.
Expenses. And what kind of expenses? All the expenses. See? All the expenses. 1, 2, 3, 4, 5. 1, 2, 3, 4. Okay. Dividend is not expense. Dividend would be closing. We have a separate closing of dividend. Okay. So when we add it, this is the amount. The next one is closing the dividend. Dividend is 600. When we recorded the dividend, we paid dividend. Entry would be dividend to cash 800, sorry 600, 600. And now when we're closing down, entry would be retained earning to dividend 600. Understand? And at the end, we have to close down this retained earning to find out the retained earning. How much is the balance of retained earning going to the balance sheet? So here we go. We have the beginning balance, right? So we start from beginning balance. Okay. What are the net income? Total revenue minus total expenses. We know that total revenue, the addition of this and this one. and expenses are the addition of all these, right? Here we go. How we close down the retained earnings. So this is the beginning balance. We write it down here. This is the revenue. This is the expenses. This is the dividend. So if you pay close attention to this format, and if we make down in equation form, it is same like that. Opening balance plus net income minus is equal to, sorry, minus dividend is equal to retained earning closing balance. So that now we understand what does it mean by closing, because this closing comes from after closing the dividend account, and where we find out the net income from sales minus expenses, right? Means we are closing sale account and we are also closing expense account. So that's why we call this is closing balance. So this retained earning closing, if we express it in our retained earning in equation form, so it will be, see, let me just further explain this equation. The equation would be opening balance plus revenue minus expenses. So this would be net income, right? Minus dividend is equal to closing retained earning, right? So it means in order to find out the closing retained earnings, you have to close down the revenue account, you have to close down the expense account, you have to close down the dividend account. Net income is an account? Answer is no. This is just the balance after revenue minus expenses, right? So that's why we have to close, that's why we write it down closing balance here. Right? Any question? No more question? Okay, let me see the battery here.